Welcome to the Stocks on the Rock Show. Whether you like it neat, on the rocks, chilled, or warm, everybody's happier when there's money in their account and a drink in their glass. Let's get started.
You know, there's a definition, and this word is denoting an outstanding or supreme example of a particular kind of person or thing. So if you were to describe something using that definition, you'd call it uber. You would talk about something as uber if it's awesome and amazing. And so today we're going to talk about two things. Uber, we're going to talk about Uber stock, and we're going to talk about my Uber favorite version of whiskey, Blantons. So welcome everybody, Stocks on the Rocks, where I get to talk about two of my favorite things, a stock that I think is interesting and a spirit that I think is interesting. And so today we're doing Blantons and Uber. It's taken me a while to do Blantons, I got to tell you, partially because it was hard to find. When I first started doing these shows, I didn't even have any bottles of Blantons. We were on a waiting list for about a year to get a bottle at our local liquor store here. A bottle showed up. Somebody actually called us, which was amazing. And then I had a very dear friend who went on a cruise, and he actually found a couple more bottles for me and brought them back. So I've got a little stash put aside, but I like it well enough that it's important to do that, because this is really, it's tough to get. I mean, good luck getting it in your liquor store. Typically these have an MSRP of about $60 a bottle, but I've seen them anywhere from $70 to $180, depending on kind of where you go. So this is, Blantons is the original single barrel bourbon whiskey, and when Blantons came out originally, and it was from the Buffalo Trace Distillery, Colonel Blanton started at the ripe old age of 16. When he was 16 years old at the distillery, and I think he worked in the mailroom or something like that, eventually became president of the distillery. And as the president of the distillery, what he used to do is he would host dignitaries. And one of the things that he would do when he would host dignitaries and ambassadors and important people is he would take them to what he called the honey hole. And the honey hole was where he would open one particular barrel and serve whiskey out of that one barrel. And master distiller Elmer T. Lee, who also has his own very, very strongly recommended line of bourbon. When Blanton passed, one way that he commemorated him was he started the single barrel line, and he used Colonel Blanton's name. Now, one of the interesting thing about these Blantons is that it's stored in Warehouse H. Now, Warehouse H, the Buffalo Trace Distillery, and Buffalo Trace has a lot of really great bourbons. But Warehouse H is unique because it's a fully metal building. And as a metal building, it has more temperature variations. So you see the temperatures go up and down a lot more in Warehouse H than anywhere else. And that's one of the unique characteristics of Blantons. And so if you get a chance, there's nothing, and I mean this, there is no whiskey that I recommend higher. This has an amazing caramel note, and when you sip, it's got, immediately right off the nose is just a perfect balance of vanilla and sweetness and smoothness. And so, this I think is one, if I could recommend one, and this is our holiday edition, notice our uniquely new set. On our holiday edition, if you're looking for a good Christmas gift, if you find this, buy it. If you're looking for a good Christmas gift for me, if you find this, buy it. I will gladly accept it. No. But this is, it's just, even the finish is very, very mellow. I think it's about 90. This particular bottle is 93 proof, and it came from, the whiskey was dumped on September 13th, 2019. So, you have and barrel number 163. And so I find that really unique. One of the interesting little things about Blantons is that the topper here is a horse. And there is the letter T is on this one. There's actually one. There's a Blantons. There's a letter on the bottom of each one of these, and some people have collected all of them. I would not be one of those people, but I will be someday. So, cheers. If you get a chance to get Blantons, make sure that you do. But let's talk about our stock of the day, and our stock of the day is Uber. Now, Uber is, I think, an interesting stock. So, Uber started in 2008. Two guys in Paris. It was cold. They wanted to be able to hail a cab, and they couldn't get one, and they thought, wouldn't it be great if I could just get one on my phone? Well, about a year later in San Francisco, Uber was founded, and about a year after that was when they had their first ride. And Uber, most people know Uber as the ride-sharing app. It's a technology company at its core, founded in 2008. First ride in 2010. And when we think about Uber, we think about, ride sharing, but really Uber has a lot more things going for it, right? There is, obviously there's Uber Eats, which many people will use Uber Eats as a way to just get more, get order takeout, whatever they want. There's Uber Business, there's Uber Freight, there's Uber Health for healthcare rides. Inside of Uber Ride, there's Uber Pool and Uber X, and many different ways that the company can get can get people connected to one or the other. My favorite is this new Uber Elevate. Have you guys seen this yet? This is amazing. So Uber Elevate is basically helicopters. Yeah, you read that right. It's going to start, I think in LA and Dallas are going to be the two first markets that it comes out in. It's launched, I want to say it's planned to launch in 2021, maybe 2022. But the idea is it could take people from the suburbs into the city in specific launching areas. So Uber is opening up what it does. And, as of now, there's about 91 active members, according to Uber's website. And they've done about 10 billion trips. And they're currently in about 63 countries. So if you think about this, that's a humongous, it's a megalith of people using it. Then why are they losing money? Uber is bleeding cash. So we've got to talk about not only the good things about the stock, but also what are some of the fundamentals that are causing Uber to struggle just a little bit. Now, while I'm thinking about it, I need another sip of my Uber bourbon. Stuff is so good. Once again, it's the Uber version of bourbon. When we think about Uber, they've had many publicized fights with their drivers. Their drivers don't feel they're getting paid enough. Their drivers are, it kind of seems like from the outside that the drivers want to be treated like employees, even though Uber provides them the freedom to be an independent contractor. So it's really, what do you want out of the relationship if you're a driver, right? That's what I would say on that piece. And so there's many publicized fights over drivers. The way that they treat their drivers is something that has been made about in the news. Uber Eats is really the newest one. And I noticed the other day, I ordered an Uber Eats, and I want to say that for me to get my food delivered was about $3. I mean, it's just, the revenue on Uber Eats is very small. So much so that Uber Eats represents about 15% of the total market share, yet it made up about 50% of the company's total losses. So there have been rumors swirling around that they may sell off Uber Eats, right? Maybe they sell it off to Grubhub, which is doing excellent from an equity perspective. But if they sold that off, you'd immediately see a boost in the stock. But a lot of news, especially in the last 6 weeks, have happened with Uber. So the first news that happened was that London has come out and said, you know what, Uber, you're out. There's too much of a possibility of somebody who says they're your driver not being your driver, and we're not going to let you drive in London anymore. So they suspended Uber's rideshare privileges in London. Now, this made a lot of Londoners very upset that didn't want to see that happen, and so they're currently kind of fighting it. It's in the battles, but it definitely had a hit on the stock, as right now it's under appeal. So that was one major piece. Another is that Uber's former CEO had huge insider selling of the stock, and he basically sold almost, I want to say it's half of his position, which made people scratch their heads and were scared and worried about it when you have that many insiders selling. And then the third thing, and this is probably the most recent as we're here in the middle of December, Uber just came out with a safety report. And in their safety report, they self-reported the number of assaults, the number of crimes that occurred, the number of accidents that have occurred over their rideshare system. And the reason that they did this is because they felt like as a technology company, they wanted to provide transparency. Now, in the world of Facebook and Google and Twitter and all those other companies that don't provide any transparency, it's actually unique to see that transparency being reported. And the thing that Uber wanted to get across, they reported that they had about 6,000 assaults last year, which is awful, right? Even one is too many. But it represented less than 0.0002% of their total rides. Uber's point in showing that is, listen, we're transparent. We know that there are going to be things that are outside of our control, but we believe that we've minimized that risk to the greatest extent that we can. Now, the stock took a bit of a hit on that news. But one of the things that I find interesting about looking at the stock is, what are the insiders doing? Now, the former CEO, he's dumping everything he's got, right? But the current CEO, now he made a big insider transaction. So this is always interesting. It's always interesting to see insider transactions, not only when they sell, but more importantly when they buy. So earlier this year, the current CEO sold a very big stake. And when he sold that stake, it got the news media up in arms. Well, recently he just bought back in with a very large stake, and he bought back in at a much lower price. I mean, he sold high and bought low, which is essentially what we want to do in the markets anyway. And so what this tells me is that have most of the insiders that weren't able to sell, once their moratorium on selling ended, and that's really what happened here recently, is that the former CEO, he had a moratorium on when he could sell, and typically that's the first few months that after a company goes IPO, you can't sell for a period of time. Once that restriction's been lifted and they wash out all that selling, is there a thought that we may see a little bit of support at this level? So let's look at the technicals. So when I look at the technicals of Uber, clearly on a daily chart, we're in a downward trend. You see this downward trend as we've come back down to around $28.50 a share. Now, it's up a little bit off the lows of 25, but sitting at $28.50 a share, I think that there can be a reasonable amount of optimism around this stock getting above 30. So now, I'm not willing to act until it gets above 30, and I'd want to see price get above 30 before I would do anything in this stock. But if it does get above 30, there's plenty of room for price to run. Matter of fact, I don't think it would be unrealistic to see the stock go from 30 to 40. That's a very realistic number. Now, it's a little bit still well below its high price of about 47, but to get to about 40 or even 35 would be a monumental move up on a percentage basis for this stock. Now, what is unique about that? Well, what's great about it is taking a look at what's called the implied volatility. Now, for those of you that use options, implied volatility shows the pricing of the options. And in this case, look at where our implied volatility is. It's the lowest it's ever been, which means that the market is basically saying, look, we're not interested in Uber anymore. They're old news. And so the hype has kind of died off. Now, what's great about buying at these areas is that, sure, I could be correct on the direction and it goes up, but even more importantly is, what if the volatility increases? Now, take a look at the earnings reports. If I look at the earnings reports, you notice that the first earnings report lost money, the second earnings report lost money, the third earnings report lost money. They've all lost money, but it's losing less and less money each time. Now, do I expect it to be profitable this time? No. But they really believe that by the middle of 2020 that they've got the formula in place to start putting out profitable quarters, and they're continuing to be a growth stock. So looking at the options on this piece, with that volatility as low as it is, you can go all the way out to March, which is essentially about 90 days worth of time. And the at-the-money option is going to cost you around $2.60 a share. It's a very inexpensive way to potentially take advantage of what could be a big upside move. But I'd like to know your comments down below in the comment section. Tell me what your thoughts are on Uber. Do you use Uber? If you do, which ones do you like? Do you like X? Do you like Pool? I can't wait for Uber Elevate. I'm taking a helicopter. If you've ever had Blantons, do me a favor, leave that in the comment section down below. And if there's something you'd like me to review, also leave that in the comment section down below. But until next week, everybody, hope you guys have an amazing week. Cheers.